Ladies and gentlemen, good day and welcome to the Kellton Tech Solutions Limited's Q4 and FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. I would like to thank you all for participating in the company's earnings call for the fourth quarter of the financial year 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature, and such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on the management's beliefs as well as assumptions made from the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and the financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call. We have with us Mr. Niranjan Chintam, Chairman and Whole-Time Director, Mr. Karanjit Singh, Chief Executive Officer, India, and Mr. Srinivas Potluri, Chief Executive Officer, US. I now hand the conference over to Mr. Niranjan Chintam, Chairman and Whole-Time Director. Thank you, and over to you, sir.
Thank you, Dorgan. Excuse me. Good afternoon, good evening, or good morning, wherever you are. Thank you for joining our Q4 and financial year FY23 earnings call. I want to start with the financial highlights of this year as well as this quarter, and then we'll talk about the qualitative stuff of what we achieved over the last quarter. For this financial year ending FY23, we had 919 crores worth of revenue with an EBITDA of 95 crores and a PAT of 57 crores. This is without the exceptional item. Okay, we'll talk about the exceptional item in a short bit to give an explanation there for that too. With the exceptional item, the revenue and EBITDA still stays the same. The PAT is a negative 126 crores. Now going to the quarter numbers, the revenue for the Q4 quarter is 243 crores with an EBITDA of 17 crores and a profit of 7 crores. So earnings per share for the last quarter is 0.12 paisa. That's what the earnings per quarter. For the whole financial year, the earnings per share is 5.51 rupees. That is without the exceptional item. With the exceptional item, it is a negative 13.56 rupees. Now, lots of people may have questions about what are the exceptional items. Exceptional item is nothing but the goodwill that we have been carrying on our books. As we are all aware, we have done multiple acquisitions over the last few years, and that has been sitting in our subsidiaries overseas. We had 3 subsidiaries where this goodwill is sitting. One is Kellton Tech Inc., which is a U.S. entity, Kellton Tech Solutions Inc., which is another U.S. entity, and Kellton Tech Solutions Ireland. So that is where all this goodwill has been sitting. And also I've been talking about over the last 1.5 years, I'll be talking about One Kellton. So since we launched the One Kellton, the brand values that have been sitting as goodwill into our books have no value anymore, because now we are only projecting Kellton and not marketing the prior brands that we acquired. So our auditor has recommended, in addition to that, we also had an external consultant to help with us with this, to what should we do about it. Our auditor has recommended to do a complete write-off instead of amortizing, which means that every quarter or every year we could have taken that. Instead of that, he said, let's do a one-time write-off. So we are done with it. And that is where this exceptional item of 184 crores or $22 million has been written off completely, and that is why you see our whole year has turned negative. This is a one-time write-off. Now completely all the international or at the consolidated level, goodwill has been written off. Our ratios should start looking better, and our balance sheet size has shrunk. I have been talking about, looking at it, and also I said, we have hired a consultant in the last earnings call too. We have been informing you when questions are asked of what it is that, management is thinking about, and now the board, the auditors, the audit committee all felt that, this should be a one-time write-off, and we have written it off. Now, talking about the customer acquisitions over the last 1 year, we have last quarter, is about 8 new customers that we acquired during the last quarter and about 30 over the last year. Also, operational highlights, Kellton has set up a K-Verse Customer Experience Center in Gurgaon, so a customer can visit us and look at and get a feel for the kind of work we do live with devices, IoT devices, with presentations, with AI-enabled devices, all that they can experience there. So that is an achievement that we did last quarter. Also, Kellton has been recognized in the SME space by Zones. That was the first foray into some of these analyst reports, and we have come out very as a leader in that space with the big boys that are out there. So that's a big achievement for us. Hindustan Times has recognized Kellton as one of the leading companies in blockchain. So that's one of the prestigious achievements that we have. Now, with that, I would ask Karanjit to talk about the AI. I know everybody is curious about what Kellton's strategy or what it is that Kellton will be doing in the AI part. We have been doing lots of research into it, and Karanjit will talk a little bit about that, and then I'll hand over to Srini to talk about some of the major hires that we made in the U.S. That would help us grow for the next years to come. With that, Karanjit, can you talk about the AI, what all work we've been working on, and how soon we'll be coming up with an outward-looking strategy while an inward-looking strategy we already have in place. Go ahead, Karanjit.
Thank you, Niranjan, and hello, everyone. So as all of you would be keeping track, there has been a lot of excitement with the whole ChatGPT thing with generative AI. And, there is obviously, it will go through its own hype cycle. But all of us have, it's a very exciting development as far as we see this. And Kellton, obviously, one of the things that sort of defines us is basically working with the latest cutting-edge technology. So as Niranjan said, as soon as this whole ChatGPT and generative AI has come up, we have put teams to start looking at it. And in fact, we conducted internal hackathons to figure out, of course, first to get everybody excited and also to get a little bit, come up with ideas. And then we went through a process of selection because that will also help us figure out the nice use cases that we have. And then as, so we have compiled a lot of list of use cases. We have also started having conversations with a couple of our customers. Without naming them, I can say that there are at least 2 or 3 customers where we are having active conversations where, we are helping them or working with them on seeing, on basically figuring out use cases in their domain where they can actually use generative AI effectively. At this point, as Niranjan said, this is all something that we are working internally. So we have a fair idea, a team that is working on it, and we are trying to now refine. And also we have test-driven it a little bit. We are now in the process of basically refining that strategy, finalizing it, and then go out to market with this strategy. Thank you, Niranjan. That's all I have.
Thank you, Karanjit. Srini, do you want to talk about the major hires we made in the U.S. So that people get a feel for what's happening?
Sure, Niranjan. Thanks. In extension to what Niranjan mentioned about the One Kellton initiative and the strategic nature of our growth plan, we have put in place to execute some of these initiatives, and we've started those hirings to make this possible. We have hired a couple of VPs, a couple of AVPs to support us, and one of the hires has been a VP for strategic alliances and products based out of Bay Area, California, and he will be driving the charter for developing and scaling new strategic alliances in sell with, sell to, and sell through models, and leading the go-to-market for our software products, IP, platforms, and accelerators. Another big hire that we've done also joins us as an AVP for digital and IoT platforms based out of Seattle, Washington. He will be leading our foray into digital and IoT platforms and solutions focused on sectors like healthcare, fitness, automotive, and industrial. These are the two major players from a marketing, sales, business development, you may call it, to execute. And to support them, we have hired a couple of system and enterprise level architects also based out of the West Coast. And we will continue to make the hires to support the One Kellton strategy.
Thank you, Srini. In addition to whatever we did in US, there are some strategic hires we made in India too. We also have a head of sales that a new person has joined us. So we have been doing a lot of aggressive hiring when it comes to sales and sales enablement part of it, while the rest of the teams, the developers and all, we have slowed down hiring based on what we are seeing out in the market, the customer feedback that we're getting, where there are freezes. So we are mindful of that, and we are working with whatever it is that we are noticing in the industry, as well as what our customers' feedbacks are coming. So we will continue to make investments into the new technologies, as like AI, IoT enabled AI, to cloud, to cybersecurity. All those are key areas of focus for us, and we will be continuing to make investments when it comes to both sales and sales element, like I said, and if we require some strategic people for execution part also, we are making hirings. With that, Darwin, can you open up for questions?
Yes, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman Vishwakarma from Robo Capital. Please go ahead.
Hello, sir. Yeah, so thanks for taking my question. Just a couple of questions on, so are we maintaining the 24% EBITDA margin guidance that you have given?
So we have not for last quarter, as you are aware of the numbers that we have presented, Aman. So we would be, that's our aspiration, we want to get to that. But with that said, right, with everything that is going on in the industry, we have to increase the salaries. As you know, despite whatever that economy is slowing down in the Western world, the talent pool is still limited. So some of the numbers, the differences are actually this reduced EBITDA margins that we had for last quarter is related to our annual increments that we give in January of every year. So there was a big bump in our cost there across the world that we had a bump. So that's the reason why there's a reduction, while our bill rates have not gone up. And because of the customer hiring freezes, customer own challenges, right, we cannot increase the bill rate to the extent that we wanted to. So the number mismatch is there when it comes to what we are charging versus what our costs are. That arbitrage, as I think probably everybody is facing in the industry, we are also facing similar pressures when it comes to cost increases, but our bill rates are not increasing to the extent that cost is increasing. So yes, we still want to target that, but with that said, right, with the new technology focus that we have gone into. Hopefully, right, some of the productivity increases that we can get out of using AI, ChatGPT, generative AI, all those kind of tools, we should be able to squeeze some additional margins over the next few quarters. This quarter is probably going to be a little bit better than what we had last quarter, but going forward, we'll be in a much better shape.
Okay, and next question would be on the order book. And so what is the order book standing as of now? How much is the order book?
So typically we have close to 8 to 9 months of order book backlog that we have into our books. Exact number I don't have it top of my head, but what the normal every year that we have a similar kind of 8 to 9 months worth of order book.
Okay, sure. So thank you. That's all from my end. Thank you.
Thank you, Aman.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Rajesh Mundra, an individual investor. Please go ahead.
Good evening,
Rajesh. Yeah, go ahead, Rajesh.
Good evening, sir.
Yeah, good evening, Rajesh. Go ahead.
What is revenue target of company at this time for 3 years angle?
See, we still want to, like we talked earlier, right? Our aspirational number is 200 million. Today we are 110 million. We still want to be at the 200 million target that we have put ourselves to, and I think we can still achieve it unless some major disruption happens, right? Europe, as I spoke in earlier quarters too, has been a challenge for us, but what we are seeing is early signs of some green shoots coming out. Our pipeline is increasing, so hopefully with this new technology implementation that we are going to be, we have started and also will be doing, now we hope that we can get a lot more revenue coming in, pipeline building up, order book building up, so all that. But the 3-year target is for us still $200 million.
Thank you, sir.
Thank you, Rajesh.
Thank you. Participants who wish to ask questions, you may press star and 1 at this time. The next question is from the line of Bhumik Shah, an individual investor. Please go ahead.
Hi, Bhumik.
Hi.
Yeah, what question can I answer for you?
Yeah, no, my question was also in that line only, which you answered for Rajesh actually. So, any guidance for this financial year that is going on in terms of revenue growth and in terms of our top line sales growth?
I don't want to give a guidance for this quarter, this year, sorry, Bhumik. The reason why I say that, as you probably have noticed, right, the Germany is under recession now. There is going to be a cascade effect. We don't know what it is going to affect the Western world, which is primarily our revenue, where we're getting 80% of our revenue comes from the Western world. So everybody is facing a risk of recession. So I don't want to give a guidance and I'll be wrong with it. I will say, we will have some growth for sure. What it is that, today I don't want to give a guidance.
Okay, so but we will have growth on what we did on last year. That will be for sure, right?
I mean, there's no guarantees, but that is our ambition and goal that we want to get to. Yes.
Because the thing is that actually, as we speak, actually, I have been on a Concall to some other IT companies as well. Actually, they have been guiding on the guidance on a very not on this lines actually. They are guiding very well actually. So they are very much confident of having the good growth, even though the market is in turbulence actually. So that's why I was a bit perplexed.
See, so there's a marginal growth. If you've seen all IT companies for last quarter, we did much better than many of them. If you look at last quarter revenues, probably, right? Mm-hmm. So everybody's revenue growth has fallen. Okay, so I'm wondering where you're getting the news that, hey, it's going to be a great growth, right? It is going to be some growth that we will get to, but, I don't want to give a guidance this exactly how much the growth is going to be. we did more than what other people did, most others rather. And we are hopefully that we want to do better job than others, but again, there is a risk of recession that people are still talking about. Hence, I cannot give guarantees. That is the point I was trying to make.
Okay, sure. Thank you so much.
Thank you, Bhumik.
Yeah,
Thank you. To ask a question, ladies and gentlemen, you may press star and 1. The next question is from the line of Devdutt Gowda from SPL Finance Limited. Please go ahead.
Hi, Devdutt.
Hi, Niranjan.
Yeah, go ahead.
Niranjan, last
there's an echo coming from your area, so just speak.
Okay, now is it
I request you to please use the handset when you're speaking. There's a disturbance on your line.
okay. Is it fine now?
This is a little better.
So, Niranjan, now, since last 1 year we are doing that one filter thing, right? So, is that completed or still in progress?
It's done. The end of it is this goodwill write-off, right? We're done with it.
Okay. And Niranjan, about that write-off, something $22 million is it, right?
Yes.
So I'm an individual investor. So how it will impact to the debt? Will it impact to any debt? Because I'm.
So can you mute yourself for this? I'm getting still that bad noise from your phone. I'll answer the question. Okay. So see, this goodwill is a balance sheet effect, right? It is a nominal entry that we have to pass through P&L. It has nothing to do with debt. Anytime we do a write-off of goodwill, it is passed on through the P&L and then hits the balance sheet. But, it is end of the day, it's a balance sheet item, not really a profit and loss item. We are operationally still profitable, and we will continue to be profitable. It's just that, when you do these kinds of write-off stuff, we pass through P&L, hence you see the number, big number, saying that, okay, hey, it's negative for last quarter or for the whole year, which is, a nominal part of it, not in real cash terms, right? We are positive.
Okay. It will be fine only, right? Because
yeah, please go ahead. Yeah, please go ahead. And again, after the question, can you mute yourself, please? Yeah,
okay. So next quarter onwards, that would be not there, right?
No, it won't be there. This is a one-time write-off. We're done with it.
Okay, because that's why stock price to the tumble around 10%. Maybe.
I understand. I cannot comment on the stock price, right? That is something that's outside my control.
Yes, I understand. I'm new to finance, so that's why yesterday night I saw the report and I also confused because I need to learn. Because it is a very big number.
Yes.
Okay.
Yeah. Thank you.
We have the next question from the line of Aman Vishwakarma from Robo Capital. Please go ahead.
Hello, sir. Hi, again. So this time my question is about the US business. So what sort of exposure do we have in terms of revenue percentage from the US?
80% of the revenue comes from US.
80%. Okay, so that's a huge number. So are we planning on reducing that sort of exposure?
We have been trying. That's one of the initiatives we launched in Europe. That we have not been successful, but now we have retooled. We changed the leadership in Europe, and our pipelines are increasing. So yes, and also we have made foray into Middle East, and we are making deep investments into Middle East, hoping to diversify. But as you are aware, right, US in a dollar terms spends the most in IT. Yeah, so there is a concentration there. Yes, there is a risk there too. Yes, you're right.
And one of the previous questions, you also said that you weren't able to pass on the cost as much as your expenses grew. So,
okay.
I mean, when the US is undergoing such a recessionary pressure there, I mean, how do we see that, how can we even expect to pass on the cost to the US clients then?
You're right. That's what I was saying. We were able to pass on some cost, but not all of it. Hence the margin squeeze that we have. So the only way to improve that, is by increasing our productivity. And these new technologies coming in, AI, the generative A component of it, the chat GPTs of the world, are going to help us increase productivity, which is what Karanjit was talking earlier, where we were saying we're trying to squeeze more out of our developers without hiring. Right? So we believe that we can get more productivity out of our existing engineers. Thereby, yes, the cost will not be to the customer, right? What happens is that we are able to quickly turn around a solution to them or launch a product. What used to take a month, maybe in a few weeks we can launch. So these are some of the things that we have already started working internally. And like Karanjit was saying, we already are talking to customers to do their work using some of these tools to help launch products much faster. So the margins should improve is what the point is.
Okay, sir. And you also said that I think you guys tried to expand in Europe. So what went wrong there exactly? If you may brief me a bit about it.
It's a leadership issue that we were hoping that we had some strategic hires there that did not pan out. So we have retooled our leadership there and re-engaging. Europe is not an easy market like compared to Americas. So it's a learning curve for us, and I think we learned the lesson now, and we are doing much better job of building the pipe now compared to earlier.
Okay, but are our products ready to cater to the Europe market, or do we have still work?
We are a services business. Yes.
Yeah.
So we have a low. I'm going to use the word nearshore development shop, which is required for Europe in Poland. So we have all the tools. Let's put it that way, right? We have all the tools that are needed. It's just that our strategy did not work out. And we have changed the strategy, changed the leadership, and we have now seeing some signs of increase, and we're going to redouble it. We have all these analysts that have given us the leadership position. That also is helping, and we are going to get more analyst review and get ratings that way too. That will also improve our credibility all over the world. So we are doing all the things that are required. It's a matter of just customers accepting and giving us the business.
Okay, so it was more of a customer issue and not your service issue, right?
It's a more of a what? I'm sorry, you broke up there.
It's more of a customer onboarding issue rather than your service issue, right? I mean, you're all part of the service.
Right, you're not able to sell, right? So
yeah.
Now we have to change that chip. Yeah. It's nothing to do with us not being able to deliver. So we have successfully delivered many projects, including in Europe. It's just that acquisition has been a challenge. Customer acquisition has been a challenge.
Okay, got it. Okay, thank you. That's all from my end. Yeah.
Thank you, Aman.
Thank you. We have the next question from the line of Sanjay K, an individual investor. Please go ahead.
Hi, good evening, Niranjan.
Yeah, good evening. Yeah, go ahead.
Hi.
Sanjay.
Yeah. So first of all, congratulations to your team. I mean, it's a really good increase in top line. I mean, compared to many of the companies, it's a good increase. So great work on the revenue side. Definitely the impact on the bottom line, and you already mentioned the reasons for that. Any more elaboration you want to give? Like, what are the initiatives you are taking to increase the bottom line or margins other than productivity? I mean, are you going to introduce more of the freshers, low-cost resources, and increase in more managed services compared to professionals? So how things are basically going to shape up in the coming year?
Okay, so to answer your question, all the above, but I'll go more specifics beyond that. So typically what happens is, right, when we hire versus when we start seeing results is about 6-month lag.
Okay.
That is how long it takes for a cycle for us to get business or get productivity of any delivery person or what you call implementation person, right? So there is a lag of that, at least minimum 1 quarter, right? For us, we say, okay, 2 quarters it's going to take before they start producing. So the cost pressure for the first 6 months and a half is going to be higher, and then we start producing. Now, to answer your question on how else we're going to improve, we're going to use the tools that we talked earlier in the earlier conversation where I said AI part of it to increase productivity. So that would give us additional margins that we can get. Regarding your question on freshers, yeah, it's early days. We typically hire, last year we had about 200 plus freshers. And this year, we haven't come up with a strategy yet for this year. The reason is, we're just being mindful of what is happening all over the world in the economic situation. And we are every day readjusting, retooling ourselves to cater towards what we are seeing. So yes, there will be hires for sure. How much or how many, we don't know yet.
Sure. And other point about this, the new business, what you're getting, like how is it? Is it more managed services, more professional services, and is that mix?
We would be doing more of the services, but we are getting into what we call the platform play. So when we do the platforms, that will give us a faster implementation. It's not a product sale, mind you. It's a platform side of it. And then using that, we should be able to launch quicker solutions to our customers with better margins. What used to take months, probably will take a few weeks to probably, took a couple of months versus 6-month cycle that we were earlier that we were doing. So we're doing all these different strategies to increase that. We are not into managed services at this point. The managed services business is a commodity play, and we just what value we add there, we don't see it, but it will give us a top line. But bottom line is still probably less than what we can get from a services versus a managed services part of it.
Sure. Thanks, Ranjan. And one more point about in last call, you mentioned that you'll be having maybe discussions with analysts and how to create more coverage and more visibility of your company among the investors. So any such initiatives now are you going to take? Because I'm not seeing any much activity in last quarter at least. So are you going to have more maybe meets with analysts or more meetings and with investors and all?
So we are talking to analysts, and I think Zenov is one of them that we talked about, right? And ISG is another one that we talked to. We're trying to get up one by one up the chain, try to get to as many analysts. But if you're talking about the stock market analysts or the fund managers, that we have not done yet. We want to get all of these third-party authenticating our capability first done, and then we'll go talk to the stock market and fund managers probably a couple of quarters from now.
All right. And so you just mentioned that the coming quarter is going to be better than last quarter, which is Q4. So now you're seeing that mostly the Q1 onwards, you'll be seeing more improvement into your operational performance going forward, like from Q1 to Q2 and Q3. Like you see, that's what.
Like I was talking earlier, where I said, right, one hire to when we start seeing revenue is about 6 months. So that is the reason why I'm confident that our numbers should look better, while keeping the cost the same. Well, we will continue to make investment. Don't get me wrong. We are making investments, hiring people to help us with this new AI part of it, with IoT, AI-enabled IoT that Srini talked about. How do we sell that to healthcare side of it? How do we sell our capability to that? So there will be some investments made, but our cost will not be as significant increase as what we did in the last quarter and the quarter prior, where we were what we call front-loading it. That's the word we normally use internally. We are front-loading our hires so that our numbers look better as the quarters go on.
Sure. All right. Thank you, Ranjan, and all the best for coming year.
Thank you, Sanjay.
Thank you. The next question is from the line of Shah Nawaz, an individual investor. Please go ahead.
Hi, sir. Good evening.
Shah Nawaz, how are you?
I am fine, sir. How are you, sir?
Good, good. Good talking to you back again. We talked last quarter. Yeah.
Yeah, we talked. Your few of your commitments, sir, I want to congratulate you. One is you have told you are going to remove that cancer of goodwill, which is there in your book. So that is being done. And I have seen the market today, so that reaction has also come. Okay. Second is about like performance on revenue. That also I want to congratulate you. But the Sweet 16 has become 9, sir, actually. Okay.
You're the one, I remember last time you asked me that. The 9, you know why, right? The cost went up. So,
yeah, so I was expecting something more than Sweet 16, but to be honest, very honest, you know, that was my wish. Sir, actually, so now many of them asked the question that now hopefully we are going to do better. And but I have certain questions.
yes.
One is when you said 9 months order book, so I should multiply with Q4 number, like whatever you have given the Q4.
Correct.
That
Correct, yeah.
binary, if I do my binary multiply, so order book, shall I multiply by 3?
So the 9 months, so you'll talk about for the whole year, right? So that's how it comes. Yes, you're right.
Okay. So many. And what I'm saying, you said 9 months order book you're having. So you have done 243 something, 240, 243. So is that multiplied by 3 is the order book you have? Similar kind of?
See, we have.
I should multiply. That 9 months means what I should understand basically. That is not clear. The relative.
The best way is take the whole year and go with 9 months instead of doing it like that, right? So then average is out, right? Okay, so that is the book that we have in place, and it's probably around 8 to 9 months, right? It's not exactly 9 months; it's somewhere around there.
8 to 9 months in between. So
yeah, so go with the year would be a better number.
So the 2020, 23-24, the wish list in last meeting you said is going. You have the wish list of 20% EBITDA, right?
Yes, that is the target that we are going to.
We have done 7%, sir. 7%. Even your some of your peers like Sapsoft kind of people, they are also doing 22%, sir. Okay.
Okay. So we again, as I told you, right? We front loaded our costs.
Yeah, I got it.
Okay, so that's the reason why, right? You know, that's what happened.
Sir, in your balance sheet, you have written announced payment of 45 crores. Okay, and you have borrowed some. I think you have borrowed something to pay that. If I see the cash flow statement. So can you elaborate what is the announced payments you have made? Whether you acquired some company for which you have made some milestone payments, or what is exactly announced payment here?
So this was an acquisition that we made about 3 years back, little over 3 years back. Okay, and you know there was a balloon payment that was due. There were a lot of negotiations going back and forth, and finally, you know, we agreed on a number and we paid that out. So that's the reason why you saw the amount of earnout that was paid out in our cash flow statement, and as well as we had to borrow some money to pay that out. We didn't have enough cash to do both, right? Invest in the growth as well as, you know, to pay out the earnout. And that's the number. Sorry, go ahead.
Yeah. That acquisition, what is that 3 years before? So you are showing that revenue also in the reporting, or you will show now from?
It's already included in the revenue. Revenue is already included. Yes. 100%. It's been included for the last 3 years.
Okay, for 100% of that.
Yes, 100% of the revenue. Yes, 100%. We don't do any partial acquisitions. We always do 100%.
Okay. Only payment is a milestone you are making. Correct.
Yes. Correct. Yes.
Okay. So, sir, in the order win you have written 8 new customers you have added. Okay. So, and the only technical details you have mentioned in that. Okay. Half of them I have not understood. So how is the size of the order book? What is single big order book you have, sir? Because normally, whenever, you know, I was I've invested some of my money in some other companies also. Sometimes when they win some big order, single order, they tell the market or tell the environment around, look, I'm doing such kind of large size of business. So it gives a sense, that the capabilities, representation. So how is out of these 8 customers, how is the size of the order book there? Single order. I'm not talking about the cumulative order backlog what you have, because you may not be giving that. But what is the single largest order?
Shanawaz, let me answer that, right? So you're asking if the 8 new customers that you have asked. Initially, like I always talk about, the order size is small. Okay. So it's like, I'll pick one, right? You asked about this one. It's a $500,000 order, okay, that we got. But the next year, it is multi-million. Okay, so that is how these new customers that come on board, initially it's a few $100,000, and then over a period of time, they grow into multi-million-dollar orders.
Okay. So what is the single largest order you have received as of now, sir, multi-million? If you say any of customers?
So probably I would say the largest order we received is about $10 million.
$10 million. Okay. So this is the largest size of the order. So sir, now with this, can we, like as a Kellton, as a team, can we see that 2020 is ours?
What is 2020? I'm sorry.
Can we see 2023 as ours? I mean, from the top line and bottom line as well? Because
Shanawaz, because there's a recessionary pressure every part of the world except India. India is booming. Okay,
yeah, that's fine, but the numbers, sir, if I compare even with the same size of company, Texoff and all, there's a deep change, correct? So we are doing 22-23% of.
I don't want to comment about them. I don't know the details of their company. Just don't want to comment about that. I can tell you that from our perspective, we are open book. You can come see anything you want to see. Okay, so that part, that I always assure, you're welcome to come see, visit our office, see what we do and how we do it. I think some of, I guess, investors came and talked. They visited our offices. They got a tour and all the stuff. So I'd love for you to come and see too. So beyond that, right, yes, we are doing the stuff that we need to do. And hopefully, right, we would start increasing our margins, our top lines. If you believe that's something that we are not doing, we are all ears. We would definitely consider, take it into our board, discuss and come up with, a better way to do these things. We are hiring all the top senior guys that have been there and done it to help us in our growth. While some of the strategies did not work, many of our strategies, did work. And it is it's a work in progress, right? And we would get there. Unfortunately, right, every time we do some of these things, first we got hit with COVID, then now with the recessionary pressure that's going on, yeah, you could say that others are doing better, but I don't know what others are doing, or if the numbers are what they are. So let's just go from there and leave it there. I don't want to go beyond that.
Okay. And last question, I will just leave. Employee strength, what is that employee strength as of 31st March 2023?
I think little over 1,800 people.
Little over 1,800. Okay. Right, sir. This is from my end, and I wish all the best to you and team.
Okay, thank you.
Yes, sir. Thank you.
Thank you. The next question is from the line of Rahul Patani, an individual investor. Please go ahead.
Hey, Rahul.
Hi. Can you hear me?
Yes, I can hear you.
I wanted to understand your segment-wise revenue in U.S. How much revenue we can generate from U.S. regional banks, U.S. real estate, which is mostly impacted.
So when you say segment, right, are you talking about industrial segment, or are we talking about,
like banking, healthcare, travel and tourism? What kind of segment-wise revenue do you have from the different sectors?
I don't have it handy, Rahul. Let me just get back to you. Okay, on that, while our team is pulling that information out. So we do have some concentration of revenues when it comes to the new age customers. We have lots of revenue coming from banking, travel, hospitality. We have lots of them, including the latest and greatest fintech kind of a business when it comes to the banking.
Okay.
We do have some
order book loss that has happened in the US because of the recession scenario there.
Yeah. So there is a freeze. So what we have not lost, let's say the new businesses, right, are coming in, they put a freeze on it. We have not lost anything on the order. They said, okay, we are not going to be doing the new initiatives that that we were targeting for this year. So that is where we are. But whatever loss that we have is very small, not a big amount. Okay, so new initiatives, right? The number of new initiatives that have been committed to. Hey, it's going to start in Q1. They didn't start. I'm talking about calendar year. Calendar year Q1, they're going to start in US, and it got pushed by 2 quarters. Srini has a lot of war stories on these, where we projected out something internally, and then we see that hey, customers put a freeze on it. Okay. Thank you, Rahul.
The borrowings and debtors are increasing. Is there any issue in collections that you are facing?
Can you just repeat the question? Your voice was not clear.
Your borrowings and debtors are increasing.
Okay. So the borrowings is because of what we talked earlier with Shanavas, it's an earn-out payment. That's why the borrow increased.
Okay.
Nothing else.
Is there any issue in collections?
Debtors are about the same, right, in line with what the revenue is. Typically, we have debtors of about 90 days. That comes to a 1 quarter kind of a revenue is always going to be our debtors, because the collection cycles take longer. Especially in India, it takes longer. In US also, lately we have seen that some of the collections are taking longer than what we originally were projecting out. Hence, the debtors may have gone up. But typically, right, like I said, 90 days, a quarter worth of revenue is what is in debtors.
Okay. And now that one Kellton initiative is launched, what is the impact that you are seeing overall?
See, the positive impact for customer is now we are doing it in only one brand, not multiple brands. Okay, the team is working more synergistically than what they were doing earlier.
Okay.
Okay, so we are able to sell all of our services across. Sorry, go ahead. You're saying something?
Is there any software that you are coming up with, or any acquisition that you are planning, or anything?
No, so there's no software as such. We're not going to come up with software. We come up with what we call the platform. So like I talked earlier, we're not a product company. Okay, so with that said, right, hey, we are always building a lot of platforms. If we can package that into a product, absolutely, we'd love to do that, and we will do that.
Any acquisitions you are planning?
So we are going to be opportunistic. There's no plan. If something comes along the way that is of interest to us, or the areas of interest to us, we will definitely consider it, but no plan as such.
Okay, thank you.
Okay, thank you, Rahul.
Thank you. The next question is from the line of Niranjan, and an individual investor. Please go ahead.
Hi,
Niranjan.
Yeah, hi.
So you have my name, huh?
Yeah. I think we spoke, a couple of quarters back.
Okay.
Yeah.
Go ahead.
Yeah. So, the first question, I know we are running short of time, so I will quickly go straight to the point. It was mentioned to us that Kellton is now getting in touch with Adani Group to do some work.
Adani
we don't know then, Adani Airports or Adani Group, I exactly don't remember it. But then later on, we didn't came to know whether are we getting any regular projects from them, or are you seeing some developments there with the Adani Group? I'm asking this because, it's an Indian group, and there is a lot of focus on that group this stage. So
let me. So to answer your question, yes, Adani is a customer of ours, has been a customer for over a year now. Okay, so we have been doing a lot of work for them. There is about close to 2.5 million worth of revenue that came in for last year with Adani, and we think that we're going to get similar kind of revenue going forward too. So you're probably, you could be asking, yes, they did go through cash crunch when the Hindenburg report happened. But, today all the cash has been paid. There is no dues from Adani. Okay, there's zero AR with Adani today.
All right.
There was some cash crunch, and we did feel that cash crunch, but they've been very good with us. They have paid promptly. Unfortunately, they went through whatever external report that came about, and for short term, we felt some cash flow pressure, but now everything is done. We're over that.
Okay. So since now we have a good relationship with Adani, and if we have closely working with them on the airports project, is it possible to have the Kellton brand on those airports wherever we are working with them, so that anybody, for now I'm trying to see how we can market, since we have this big clients with us, how best we can market our brand.
Okay, so there are two different things, right? When I say airport, the project that we are tied up with Adani Digital and not Adani Airports or Adani Ports. We're not doing that. So it's across the board that we are working on their digital solutions. Okay, so one of the things that we launched is an app for airports. That is what I was talking earlier, and not something in the airport. Okay, this is the one platform where they can do it. Kanjit, can you explain what that is, please?
Sure. Yeah. So basically what we are helping them with is basically creating a super app that helps their, essentially the airports. And it's an app that and of course it will keep, the functionality will keep deepening because it's a super app. But yeah, initially it starts off with certain facilities, which is about typically what you will find in an airport app, which is basically you can monitor your flights, you can do some flight bookings and things like that. And then it is going to keep on adding functionalities related to all the services that happen. And they have some very creative things, but I cannot obviously name them here. Tell them there.
Okay, fine. The question was more about, since we are working with them, building the super app and all these things, is it possible to add Kellton's name in those apps, developed by Kellton or
Niranjan, let me answer that a different way, Niranjan. Okay, so our brand in India is very well recognized. Okay, the challenge is for us to get our brand recognition in US and in Europe. Even though that we get 80% of our revenue from US and about 7% from Europe, our brand is not recognized as such. Hence our foray into these, I'm using the word loosely, rating, but these industry analysts that are rating us and saying where we are on that particular quadrant, right? So we are working through that to improve our brand positioning there. We are closely working with all of these the Zinos of the world, the ISGs of the world, to get them to push our brand into their customers. So we are working with them. So that's the strategy we are following for the growth in the rest of the world. In India, our brand is known. So I guess everybody knows in this particular industry, right? Probably I'm talking about probably the investors may not, but in the industry where we operate, they know that Kellton can deliver on what they promised and have delivered on what we promised. We go bend over backward to do the delivery, unlike many others who have walked away and they called us to go fix and whatever they left, wherever they left off. Okay, so we have done that. So from that perspective, we are very well known. Okay.
Yeah, got it. The last question in the interest of time. Since we have clocked 243 crores this quarter, assuming that this would be our base from here, would it be possible from your end to tell us what is the base expenses in a quarter? What is the base normalized expense that one should see for the Kellton business? I mean, achieving 243 crores revenues. Yeah.
Okay, you broke up there. So if I got some of the words went missing, so I'm assuming you're asking, what would be our margins for the next quarter. assuming that it's a 243 crore revenue. Is that a question?
Yeah, exactly. And plus the normalized expenses. Yeah.
So normal, I cannot give a prediction on that. Okay, and I don't want to speculate on that at this point because that's going into specifics that I cannot give out today. Okay, so I just can't do that.
Thank you. Ladies and gentlemen, that will be the last question for today. I would now like to hand over the conference to the management for closing comments. Over to you, sir.
Thank you, Durbin. And thank you, everyone, for getting on this earnings call. I appreciate all the questions. Hopefully that I have answered and clarified all your questions and queries. Looking forward to talking to you soon again, either in the next earnings call or maybe in a past call somewhere. Would love to have a further conversation with you all. Thank you again.
Thank you. On behalf of Kellton Tech Solution Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.